You're right. Also, I just wanted to make, I guess, a video, as many of the lifetime members have seen a bit of an alert go off, the educational alerts. And again, this is not any kind of trading signal or anything like that. It's just an alert if you have certain levels marked up on your charts and you want, a bit of confluence. The alert will, and the alerts go off in the alerts channel, then it basically is just giving you, I guess, a bit of confidence that that setup that you're looking at technically is a actual valid trade setup. And with gold, first of all, you always want to do your fundamental analysis. Why are you looking to buy gold, right, against the dollar? Now, just quickly, fundamentally, gold and the dollar generally work in the inverse. When one goes up, as gold is a hedge against inflation, meaning that when the dollar is weaker, gold should go higher. Right now, in the US, there is higher inflation, rising inflation, but the dollar, if you look at it against various other currencies, it is probably one of the strongest currencies. Right, you're seeing the DXY pretty much just go, make higher highs and higher lows. Doesn't mean that inflation isn't rising. There's been a historically high, I think it's I can't remember the exact statistics, but there's been a very high amount of stimulus and money printing, which should produce inflation. Plus, you've got supply chain problems, etc. going on. So it's not necessarily mutually exclusive to high inflation, exclusive to the dollar and the US economy. It's rising inflation is everywhere, which ultimately, although we tend to look at gold versus the dollar, high inflation or rising inflation typically should make gold rise anyway, right? Money goes into gold because of the fact that it will maintain its value, right? Because inflation is devaluation. So generally, in an inflationary environment, ultimately you do want to look for buyers on gold. And again, this isn't trading advice or anything like that. This is not trade signals. This is just me explaining fundamentally what typically and usually should happen in certain environments, right? So ultimately, I don't necessarily want to look for short trades. I don't care how nice the short trade might look technically. I'm just looking for buy trades at certain levels, and I'm being ultra selective with those levels. And one of those setups is known as the capture pain relief trade. And capture pain relief is all about understanding the supply and demand equation at certain levels, right? And because I'm explaining, it doesn't mean it's going to do this or it's going to do that, because that ultimately nobody knows. No one can predict the future. But it's a setup, that for me, as if it's in alignment with my fundamental analysis and risk sentiment analysis, then it's something that I will look towards. And obviously I'll have to look to see if there's an entry, right? Because not every single zone is going to have an entry that you mark out. Price could go straight down. I'm not placing pending orders. Some people will place a pending order somewhere around here or wherever it is. Me, I'm not that kind of person. I will look for a candlestick setup, and now this zone could ultimately fail due to whatever it is, but if I do get an entry somewhere in and around this zone, then I will look personally to take that. And again, just because I'm looking to take it doesn't mean that you should. Again, this is not financial advice. This is not a trading call. This is for educational purposes only. And please watch, if you're in a lifetime members group, please watch that video and understand why I'm taking this. And even if you're not, if you're a subscriber, just understand that that obviously this is just me talking and showing you what one of the setups that we take in trading 180, and really, like I said, the supply and demand equation potentially at levels. So we've got a really bit of a downtrend, if you want to call it a downtrend, right? Prices are coming down, and then you get this move, and zoom in a bit, right, where you had a bit of a double bottom, right? Level looks like it's going higher, but ultimately traders' bias is really to the downside, right? You can see what's been happening over the past day or two or three or week. Look at that, just a downtrend, right? So traders are looking at trades to generally get short. Retracement traders looking for pullbacks to get involved in levels, right? So you've got three types of traders, which are breakout traders, retracement traders, and you've got level traders, right? Those are the three types of traders that trade the market, hundreds and thousands of different strategies, but generally they all revolve around these disciplines. So what you've got here is a situation where, let me just go back a little bit, use this, where traders at that point in time, back on March the 16th, would have been looking at going probably short. And the first trader to generally get involved in certain types of trades is the breakout trader, right? You've got the breakout trader looking to get short. So any breaks at this level, there are traders are going to place their pending orders. They're going to look for on lower time frames, they're looking for trades that are that indicate that prices are going lower, right? So you've got this happens, and as you can see, prices did go lower, right, and then they came back. Now one of the criteria that I do like to use is understanding is I say understanding, but looking at what time frame traders are caught, right? So if you go down to a 5-minute time frame chart, you can see that the 5-minute time frame trader would have definitely been caught in this situation, right? Because that is a very, very, very nice breakout type trade, right? You got a nice candlestick close here, right? Very bearish candle. FOMO starts to kick in. If I don't get in soon, then prices are going to keep going to the downside, right? Pretty much 99% of traders who are breakout traders, and that's the breakout trading strategy, would be getting involved in that. Then no sooner had they got involved in that, prices start to pull back. You probably got now the retracement traders trying to look to get in, right, in and around this area. It looks like it's going lower, looks like it's pausing, and then these guys get caught in their position. Now when I say caught meaning, well, why wouldn't traders just place their stop losses and get stopped out? Well, there's something called loss aversion bias, right? Loss aversion bias, and it's basically a study was done. Can't remember the guys that did it, but it basically means pain feels worse than gains feel good, right? And that really ultimately translates itself into traders not their inability to take a loss or accept a loss, because the acceptance of the loss is pain, right? And so they don't want to realize that pain. So what traders will generally do is move and remove their stop losses. So if you're going short and this is one of your stop losses, you're going to move it higher. You're going to keep moving it higher, right? The unrealized loss is going to get larger and larger, but because you're emotional in that situation, and you're thinking it might come back, this is a deeper stop loss, you might even start to add in, but traders generally, will start to add in. And this isn't exclusive to just retail traders. This is traders, this is, institutional traders as well, who have deep pockets, and what they can do is, bit like martingale in, for example, and make money on the way up, hedge on the way up, etc. But generally, when we're talking about the average trader, emotionally, they will move and remove their stop losses. And if they were risking, maybe 1% down here, right, all of a sudden it starts to turn into a 2% loss. And as prices go against them and they remove their stop losses because of their inability to accept the loss, and that could be for various reasons, right? They could be in a losing streak. They could be, have a 5, trade losing streak, a 6 trade losing streak, or even just a 2 trade losing streak, right? And or they've leveraged too much. Maybe this whole trade was 10% on that trade, for example, and they're trying to make money quickly, etc. And again, with the fact that for example, they over leverage, or they've been through a losing streak, ultimately that manifests itself in the fact that they don't want to lose, right? They don't want to lose again. So, they've told their friends that Forex trading is easy, and all you got to do is do support and resistance and and the many mistakes that traders make. But ultimately, what happens is that this loss aversion bias appears in the form of moving or deleting and removing their stop losses, right? So this is what is known as the commit or the capture phase of the trade setup, and this is the pain phase, right? The pain of they're looking at their unrealized loss go against them. 2%, 3% loss, 4%, 5% loss, and traders may blow their accounts, right? Now, when prices finally come back here, there would have been a lot of pain going on. If they haven't blown their account all the way up here, prices have gone against them, right? So this is the capture down here. This is the pain phase right here. If they haven't blown their account, right? Let's say, for example, they're 50% down, 60% down, 80% down. Ultimately, these traders want to find some relief. After pain, you want some pain relief. And if traders went short here, right, breakout traders went short here, retracement traders went short down here, right, they sold. And if they sell, right, the opposite transaction to get out of that trade is true. Either if you take profit, you have to, if your stop loss is a buy order, right, and your take profit is a buy order, because you're selling there but you're buying for cheaper, which would mean that you're making a profit, right? If it goes against you, you're forced to buy back at a more expensive price, which basically would cause you to lose. So that's how the orders work. So with this now, if they manage to survive in the supply and demand equation around here, their account manages to survive. If they sold here, to exit their trade, they have to buy, right? They have to buy to exit, to take profit, be it a smaller loss than what they expected, or a larger loss than what they expected. Either way, there's not too many people that are traders that are going to go through all of this, right, and then for prices to come back down for some sort of break-even trade, a smaller loss than what would have been potentially up here at the time. They're gonna obviously look for to exit that trade. So that's a buy order. You've got traders who actually went short here, and if they sold here, again, they're taking profit at what areas of rejection. Prices got rejected somewhere around here, and potentially you could have prices being rejected around here as well. So you've got traders taking profits somewhere in this region. Not everyone's going to take profit at that exact moment, of course, but you've got buy orders stacking up around here from these traders. And then also as well, you've got traders who are looking at taking support and resistance, right? So any kind of level of support and resistance, this ends up being a bit of support here. If they're buying at support, generally traders don't sell at support, they buy at support, so that's more buying. So then the question remains is really why, right? Why would anybody look to sell around here, right? Or even below this area here, right? Why is there going to be more sell orders than buy orders? The only reason why there would be more sell orders than buy orders in and around this zone between the 1909 and probably 1894 area is if sentiment really has changed, or, and I'm not really going to get into it in this video, or if there is some sort of stop hunt going on, and this is seen that the anything below this area here is seen as an absolute bargain. But this is the first line of defense, I would say, from a value perspective, and this is the area that I'm looking to buy potentially if there is an entry somewhere around here and nothing changes. And ultimately there's more buy orders from all these different from the capture pain relief traders, from new traders getting in long at support areas, and as well as traders taking profits. So around here for me is a decent area to look for a potential buy trade. And And so yeah, that's really the mechanics of gold. Plus, again, we've got the potential for obviously inflation, a bit of risk of coming into play. There's talk now of the UK economy potentially slowing down and other economies slowing down due to the rising inflation. So a lot of risks on the horizon coming up potentially. So let's see what happens in this area here. Anyways, guys, yep, that's it. So take care, and I will speak to you all soon.